Hi, this is John Yeager. Welcome to another episode of Think Business. Today we're going to talk about the modern accounting department. The reason I use the term modern accounting department is there's been a lot of changes in the world of technology, people, and process that are allowing for different alternatives to how accounting can be handled within organizations. Traditionally, you would have had a CFO, a controller, transaction processors, you'd have technology and a server on site, you'd have a reporting tool where you had to port the data from the accounting system into to build your complex reports. Well, today, through the use of cloud-based technology and with a growing desire to outsource, there's many more options. So when I think about what a modern accounting department looks like, is it starts with the cloud computing technology. You have to have the tools that can enable you to outsource and to get the information you need. So cloud computing and automation allow processing of transactions to become more efficient. Cloud technology allows for deeper integration with other systems, and they're multidimensional systems so that you can really kind of slice and dice data up and analyze things more than just your traditional historical financials. If you find the right outsource partner, they're going to have the right processes in place to process at a cost that should be very efficient and effective for you. As a rule of thumb, to get a full accounting department, and this could include the technology and the people and the processes they bring. If you're a small company, reasonably, simple, not very complex, maybe it's the cost of a traditional, part-time bookkeeper. If you're a little bit more complex, kind of medium size, 10 to 20 to 30, $50 million, maybe it's the cost of a full-time accounting manager. And then if you're more complex than that and larger with more entities and more complexities with your consolidation, I would say the cost is typically around the cost of a controller. So you can see, if you're looking at all aspects of a business and then the entire cost of an accounting infrastructure, you can see that the savings can be quite great for your organization. And at the end of the day, it'll be a professional accounting organization doing the work with tried and true processes, with modern accounting tools, modern reporting tools to get you the competitive advantage you need in order to make decisions you need to be successful in the future. So where does the company focus? Well, if you're large enough, you certainly would need a CFO. The CFO is a strategic officer of the company and looks at how capital can be deployed, look at IT issues, potentially HR issues, and then making sure that the accounting numbers are accurate and on time and can tell the story. The other investment that companies can make in this environment is a business analyst, someone that's trained in understanding the impact of numbers on providing information to senior management to tell a story of where to look for opportunities in the market, where to look for opportunities for growth, where to look for opportunities for cost savings. There's a tremendous opportunity for companies of all sizes to look at this aspect of modern accounting department and evolve towards that. It's a win-win. You can get out of functions that aren't quite, adding a lot of value to the bottom line, and instead invest those resources in people, in processes, and other technology that can really give you a competitive advantage as you try to compete in the marketplace. Hopefully this message has given you something to think about as you plan your future, as you plan the company, you look at budgets. If you have any questions, please feel free to reach out to me. You can find me at Bennett Thrasher, btcpa.net, or at #ThinkBusiness on social media. Thank you and have a great day.